Good evening. This is Ken Long from Tortoise Capital Management with a case study on the ready, fire, aim technique. This is a trade from August 14th, 2010, and the symbol, the target is Oshkosh, symbol OSK. So the title of this file on our chat room archive will be RFA for ready, fire, aim. 2010 414 is April 14th, 2010, and OSK is a target. Now, the market opened here at the start of this yellow box. You can see there was a gap up. Now, OSK was on our target list from the previous day. It had a very strong move, sold off into the close with a little hook up. That had been a powerful move at the end of a 10-day range, and so we were very interested on any continuation play in today's market. In fact, we held a core piece from our intraday trade from yesterday. The gap up actually gave us a benefit. Now you can see we're on 1 minute charts here. After the first minute, first green candle, gap up and strong, and then the second candle, second minute was going well. When it took out the high of the first candle, I bought at 43.20 with a 10-cent trailing stop. This was immediately rewarded. For the next 10 minutes, it went straight up from 43.20 to 43.87, so a gain of 67 cents in about 10 minutes, which is almost a 7R win. After about 2 minutes of open risk, we moved the stop to break even. It hit 43.87, then started selling off pretty sharply. There was some weakness in the market at the same time, and so we cashed a 6R trade minus the core position from the previous day, which we held. Now, the sell-off went all the way to 43.54. It actually went a little bit lower in that morning. We exited the core position at 43.40 for a nice overnight and a swing trade. But this was a relatively low-risk trade. It required some agility, and the trade was made available as a function of preparation, which allowed us to buy it as soon as we saw the market gapping up and going, and Oshkosh gapping up and going better than the market. And so with a couple minutes open risk, there's a 6R trade at 60 cents a share, and you can do the math depending on your risk exposure. If you had risked $100 with a 10-cent initial trailing stop, that'd be 1,000 shares that made 60 cents per share. That'd have been $600 on a risk of $100. So that's the ready, fire, aim technique. Sometimes we get gifts that are that easy, but fortune favors the brave. So good evening and good trading.